Most traders are losing not because they don't know how to trade, but because they don't know when to trade. After years of studying charts, I discovered that the best trades happen when multiple confirmations align in the same directions. That's exactly what the DEMATLTD strategy is built around.
DEMATLTD is a confluence-based trading strategy that combines divergence, exponential moving averages, trendline, top-down analysis to identify high probability trades setup.
This is not a strategy that keeps you glued to your screen all day. It teaches patience, reduces overtrading, and helps you focus only on setups that meet specific conditions. I will break down the strategy step by step, explain each component, show you how they work together, and demonstrate how to spot quality trading opportunities using simple process that anyone can understand. Entries are taken when divergence occurs around key exponential moving averages zones. Price respects a valid trend line. The higher time frame bias aligns with the trade directions. All conditions must align before a trade is taken. Okay, boom 900 is in a very deep profit. So I'm going to tell you exactly why I entered into this trade, why I took some sales positions. This is a sniper entry. If you observe carefully, boom 900 is on a downtrend, forming lower high, lower low, lower high, lower low. Then price now retraced to the moving average zone. That's one of the conditions that must be met. Price retracing to the moving average zone. Price here is making lower high, lower low, while the RSI, which is a blue indicator here, is making higher low and higher high, while price is still within the moving average zone. Then the next thing we need to check out is if this point corresponds to a valid point on a trend line. That's another confirmation. Sometimes we could just connect the lower high and lower low to get a trend line where this point fits into, but based on this trend line is not valid. That's why you need to be very careful. But if you picture it this way, you will see that a valid trend line touches. Okay, let me just go to H4. You can use any of the time frame to ensure that your trend line is valid. So if you look at it, this point that retraces to the moving average zone and at the same time divergent with the RSI respects a valid trend line, right? Then I stormed into the trade. But the secret to this strategy is the awesome oscillator. This is the secret. If you look at it, where we have the divergence, this is the secret of this strategy. Where we have the divergence, the awesome oscillator is negative here. If it's a bit positive, the probability could be a bit high. But the more positive the RSI is here, the lower the probability. So if it is negative, the higher the probability. If you look at it, this point is higher than this point. So the higher point here corresponds to the negative side of the awesome oscillator. Then the lower side here corresponds to the higher side of the awesome oscillator that touches this overbought region. The black shaded part here is the overbought region, while here is the oversold region. So here is very positive to an extent that it touches the overbought region, while this other side, okay, let's do it this way. Higher side to negative, the lower high corresponding to the negative side of the awesome oscillator, while the lower low corresponds to the positive side of the awesome oscillator. One, it is positive, and secondly, it touches the overbought region. So you can enter as soon as the awesome oscillator turns from green to red. So once it changes from green to red, you can just place your entry. So we would have entered from here, and look at the result, how it sold and sold all the way down. This is in deep profit. Okay, there's something very important I also mentioned, which is the top-down analysis. Here, there's no big deal about the top-down analysis. As I've said earlier, you could see that boom 900 is making lower high and lower low. But let's look at D1. Let's look at D1. You will notice that when I entered the trade, when I got the signal, or where I got the signal, the D1 is bearish. So that validates this cell M3. If you go down to H4, you also see that it is what? Bearish. And you can also draw your trend line to ensure that the market is not overbought or oversold or in a strong support or resistance level. So the top-down analysis is not really a big deal. It's not really a big deal. Just ensure that you sell in a bearish market and you buy in a bullish market. and such a market is neither oversold or overbought. It's as simple as that. So if you understood how to sell boom based on my explanations, the reverse or the direct opposite is for buying crash. So quickly I'm going to tell you why I entered into some other profitable trades quickly, and then give you the settings so that we can draw the curtain. Let's look at boom 50. This is also in a deep profit. If you look at it carefully, you should know that this market is bearish. Then price retraces to the moving averages zone. When that is done, you will see a divergence between price. Look at price at this point, then this point, making lower high, lower low, while the RSI making higher low and higher high. The RSI is divergent to the price, and here the awesome oscillator is negative, here is positive, such that it touches the overbought region. This entry is late, but immediately I saw this setup, I had to jump into a sell position and look at how well it sold. So let's look at boom 1000 also quickly. Okay, it depends on the time frame. You can get this setup on different time frames. Okay, here this setup is on the 30-minute time frame. Price retraces or retraced to the exponential moving average zone. Then let's pick the previous point. Let's connect the previous point, because that's what we do, the previous point to the point where we take our trade. So if you do that, here we have price, which is divergent to the RSI. Okay, then RSI here is divergent to the price, and the awesome oscillator here is negative, here it is what, positive. I've explained all of this. Okay, let's just do a top down. Look at D1. You will see that price here is moving downwards before the entry. So that's the major thing about the top down analysis. Price moving downward, it is bearish before the entry. Okay, I think that is that for that. So quickly, let me just give you the settings for this strategy. Here we have exponential moving average 200. You can just take a screenshot. We have the exponential moving average 150, the black. Then we have exponential moving average 100. Then these are the three major exponential moving averages. But in addition, we have the exponential moving average 650. Then here we have window 2 I work with window 2 here. I don't need this indicator, that's why I blinded it. So this particular stochastic just gives the shaded portion. Look at it here. This is white because my background is white. Then these are the positions or the numbers that gives the shaded region. You can just take a screenshot. These indicators is what gives, okay, let me blind this and blind the other. This indicator is what gives what we have here, the overbought region and the oversold region, right? Then to this indicator, I just added the RSI. The RSI is a default setting, which is 14 period 14. Then on the same window, the awesome oscillator is added. So it's a simple strategy that involves just the default setting of the RSI and the awesome oscillator basically. So that's all about the strategy. Then subsequently, I think I'll do another video for buy entries. But if you understood this, you should be able to buy successfully. You should be able to buy crash